In the summer of 2022, the streets of Phoenix looked the same. Same palm trees, same highways, same desert sun. But something invisible had changed. A 3-bedroom home that once sparked bidding wars now sat quietly. The price was cut, then cut again, across America from San Francisco to Austin to New York City. A question began to echo quietly. Why are housing prices falling in some of the biggest US cities? For years, Americans were told one story: housing only goes up. Real estate is the safest bet. Buy now or be priced out forever. But history doesn't repeat itself loudly. It whispers. And in 2024 and 2025, the housing market started whispering again. To understand what's really happening, we have to go back. In March 2020, fear froze the economy. Businesses shut down. Jobs disappeared overnight. And then the US government did something unprecedented. Federal Reserve cut interest rates to near zero. Trillions of dollars were injected into the system. Suddenly, money was cheap. Too cheap. Mortgage rates dropped below 3%. For people like Sarah Mitchell, a tech worker in San Jose, it felt like a once-in-a-lifetime opportunity. She wasn't alone. Investors rushed in. First-time buyers rushed in. Corporations rushed in. Companies like BlackRock and Invitation Homes began buying thousands of homes, turning neighborhoods into portfolios. Home prices didn't rise. They exploded. By 2021, cities like Austin, Boise, and Tampa saw prices jump more than 40% in just 2 years. People stopped asking, "Is this affordable?" They asked, "How fast can I buy before it goes higher?" But beneath the surface, pressure was building. By 2022, inflation was no longer a headline. It was a grocery bill, a gas receipt, a rent increase, and the Federal Reserve made a historic pivot. Interest rates began rising fast. By 2023, mortgage rates crossed 7%. Monthly payments doubled for the same house. Suddenly, the math didn't work anymore. Buyers disappeared. Then something else happened, something most people missed. The pandemic migration reversed. During COVID, remote work emptied expensive cities. People fled San Francisco, they left New York. They moved to cheaper states. But by 2024, companies like Amazon, Google, and JP Morgan Chase began pulling workers back to offices. Not everyone returned. Some may lost jobs, others downsized. Many stayed where they moved. That left cities with a quiet problem. Too many homes, not enough buyers. In San Francisco, condo prices dropped year over year. In Austin, listings surged while demand cooled. In Phoenix, investors began exiting fast. And when investors sell, they don't wait. This wasn't a crash. It was a slow leak. Another force was at work: neo-supply. During the boom years, builders raced to construct apartments and single-family homes. By 2024, many of those projects were completed all at once, in markets already losing demand. This created imbalance. More choices, more competition, more price cuts. At the same time, everyday Americans were squeezed. Student loan payments returned. Credit card debt hit record highs. Savings from stimulus checks were gone. People didn't stop wanting homes. They simply couldn't afford them. And then came psychology. Once prices stop rising, fear changes sides. Buyers wait, sellers rush, markets shift. In cities where prices had risen too far, too fast, gravity took over. But here's the part most headlines won't tell you. This is not 2008. There is no wave of subprime mortgages. Banks are better capitalized. Most homeowners locked in low fixed rates. That's why prices aren't collapsing nationwide. They're correcting selectively. Cities with job losses, investor concentration, and rapid pandemic growth are feeling it first. Places with strong employment, limited supply, and population growth are holding steady. The real reason housing prices are falling isn't one thing. It's the collision of higher rates, reversing migration, investor exits, rising supply, and exhausted consumers. And underneath it all, affordability finally pushed back. For Americans watching from the sidelines, this moment carries lessons. Low interest rates don't last forever. Fast growth attracts fast exits. Housing is emotional, but math always wins in the end. Buying a home isn't just about timing the market. It's about timing your life, your income, and your risk. Markets rise on optimism. They fall on reality. And reality has returned to America's housing market. The question now isn't whether prices can fall. It's this: When fear shifts again, will you be ready to move, or will you still be waiting?